This is the review for exam 4. And with exam 4, you will get some extra time to take this exam. You'll get 2 hours instead of an hour and 50 minutes because there's a few more forms this time to upload into Canvas as you're doing the exam. So I want to go over the things that are going to be on the exam. You do have a review in Canvas, and this exam is going to cover chapters 8 and 9. Make sure you have your calculator. You will be able to have your sticky note or 3x5 card with the formulas on it for the day sales uncollected and the accounts receivable turnover. So you'll have those formulas ready for you to go as well. Again, please do not use any of the demos or your homework papers or any other help to take the test. Don't ask for help from anybody else, look up answers online, or have someone else take the test for you. Use your academic integrity and not cheat on the exam. All right, so the things that will be on the exam, again, are going to be the ratio for the day sales uncollected. You're going to establish petty cash, increase replenish petty cash, and decrease the petty cash fund. You are going to have a bank reconciliation, and then you'll have to journalize the items that affect the book side. You're going to have your accounts receivable turnover. You're going to journalize some transactions to record credit card sales. You will calculate the amount of your allowance for doubtful accounts using the aging method, and then you'll record the adjusting entry for that. And then you are going to estimate bad debts using the accounts receivable balance and the total credit card sales, and then have adjusting entries for both of those as well. So please make sure that you do show your work on all of the problems so that if there are issues, I can give you partial credit. And also, please make sure that you allow enough time for uploading the forms for the test. So let's start with petty cash. Now, you did quite a few of these in Chapter 8. There's a couple quick ones here. This is Quick Study 8-9. With this one, you did establish the petty cash, and then you had to replenish the petty cash. Remember that petty cash is an asset. What we do is we take a check, we rewrite it out to petty cash, bring the money back, and put it into our petty cash fund. Now, when you establish the petty cash fund, you're only going to use the title petty cash and cash. To reimburse the petty cash fund, you will be given the amounts that were spent out of the petty cash fund, and then you'll give them given the amount that is left over, and then you do need to figure out if you were over and short. In this exercise here, or quick study, you just had the 3 different categories in which the money was spent, and then you just added those up, subtracted it from the amount that you established it at, and then any amount that was left over. And in this case, the cash was $122 to get that to balance out. Another good one to look at is exercise 8-8 and 8-9 because they both had an overage and then a shortage. So for exercise 8-8, establish the petty cash fund. You're going to reimburse the petty cash fund. Remember, if you are short, you are going to put that on your debit side. In this case, it was $3. And you do need to make sure you put that to that expense account, cash short and over, and then your cash. And then this one was an increase in the petty cash fund. And please be careful of the wording. This is the increase the petty cash fund to $400. So it was at $350 minus $400, which they want to bring it up to. The difference is just $50 for this one. Now for exercise 8-9, establish the petty cash fund at $1,050, debit petty cash, credit cash. And then you did have the different accounts that money was spent for, merchandise inventory, which is your transportation in. Remember, we're still using our perpetual inventory method, postage, and then miscellaneous. This one was over, and when you are over again, you are going to put that on the credit side along with the cash difference. Again, you will be given the amount of the categories in which money was spent, establish the petty cash, reimburse the petty cash, and then you will, in this case, decrease the petty cash fund. We did that in the demo, but when you do decrease the petty cash fund, again, it'll be the reverse of this. So it'll be debit cash and credit petty cash. So that'll be a decrease for this problem. For the bank reconciliation, you had again several of those that were completed. One of the harder ones was the branch company. You did do 8-4B in Excel or Google Sheets, and then the serial problem, those were practiced as well. But for problem 8-4, the branch company, you are going to reconcile the bank statement. Now, I'm going to give you the bank reconciliation on a form, and it's going to be this way. So it'll be in landscape rather than portrait. I will label the bank side and the book side, and then the rest is up to you how you want to fill it out. So using the information that you're given, make sure you do have the name of the company, bank reconciliation, and the specific date with the current year or the year given. On your bank side, you're going to add in any errors that you have, any outstanding deposits that are there. And then on your deduct side, you will have any outstanding checks. Remember, we list the checks individually if you're given the individual check amounts, and then you'll put the amounts next to those as well. On the book side, this is going to be what you add in any of your notes receivables that you had collected money for one of your clients. If there's a error that either adds or subtracts, you want to make sure that you get that in the right area here. For this one, there was an error for check number 3056, so you had to subtract that out. The serial problem had, or 8-4B, one of the two, had a $9 error and you had to add that in. So make sure again that you put that on the correct side. Insufficient funds gets deducted from the bank's or the book side here. Any service charges, if you have check printing, anything like that are going to go on your book side. Now, when you go to balance out, you have what the bank says that you have in your account, and then you have what you say you have in the checking account for the company. You're going to add anything in the top section, deduct anything in the second part here, and then both sides need to equal out to the penny. Make sure you double rule those. Then any items that do affect your checkbook side here need to have a journal entry. Remember, anything that's up here in the add section, cash is going to be your debit. Anything that's in the deduct section, cash is going to be your credit. So again, in this case, there was the notes receivable that was added to the checking account, so it's cash and notes receivable. Then this was the insufficient funds check. We're going to reopen the accounts receivable for that customer and debit their account and then credit cash because that amount was taken out of our account after we deposited their check. Miscellaneous, that can be for your service charge. You can use bank service charge account title. Either one is fine. And then this is for the error. Depending on what your error is, then you will need to correct it using the correct account and cash. So that's what is listed there. Again, please remember that I will give you the bank side and the book side titles. You'll have to go ahead and plug everything else in. And then make sure you double rule, make sure your heading is correct, and then anything that affects your book side is going to have a journal entry at the bottom. Okay, I'm going to skip over the ratios. We'll come back to those. All right, journalize the transactions for a credit card sales. Now, these are in Chapter 9, and there was a couple of things, but I want to just show you Exercise 9 too. Now, remember that credit card sales are going to have a fee because it does cost the company money to offer credit cards to their customers, whether it's a Visa or MasterCard in our case, or there was some fictitious cards that were listed in your book for your homework. So with this, you're going to have the sales, and then you'll have the percent for the fee, and then you have to figure out the cash. You want to make sure that they have two entries, one for the credit card sales and then one for recording the sale. So for this first one here, we sold merchandise to people using the credit card. And again, this was for $8,400. So your sales credit will be $8,400. The fee was 4%. So that goes in your credit card expense debit column. And then the remainder is going to be your cash. Record the sale with cost of goods sold and merchandise inventory for that wholesale amount. And then this is another one here as well, where we do get the cash And then we have the sales here of 5,600, sorry. And then the percent for the credit card expense, that's your debit. And then you have your difference, which is your cash. Record the sale, cost of goods sold, and your merchandise inventory. This is, again, the wholesale part at 3,500. So that's what you're going to journalize for your credit card sales. You'll want to make sure, again, that you look to see how much the fee is and then subtract that from the sales. Okay. Calculate the amount of doubtful accounts using the aging method, and then you're going to enter the journal entry for that. I think I mentioned this in the demo that this is one of my favorite parts of doing this chapter in problem 9.3a, and you can do the B problem for practice, which I would suggest that you do. You'll be given the amount of each of the different aging categories and how much money is owed for those aging categories, along with a percent, so that you can calculate out to see who might not pay. You're also going to be given either a debit or credit amount. If it is a debit balance, that means that we underestimated from the previous year our bad debt. If it is a credit balance, we overestimated what our bad debt expense would be for that previous year. It's good if we're over, because that means that more people paid. It's not as good if we underestimated, because then some people did not pay. So in problem 9.3a, we had here, you had the different categories: not yet due, 1 to 30 days past due, 31 to 60 days past due, 61 to 90 days past due, and then over 90 days past due. Again, the amount will be given to you of how much is owed in each of those categories, and then the percent, these are changed to a decimal. You will calculate that out. You will add up the total, and then you will subtract or add depending if it's debit or credit. In this case, it was a credit. So the amount that we think will become uncollected from all these aging categories is $41,650. We had $14,500 left in the account, which is the overestimation, the credit. So the estimation is only going to be for $27,150. Again, the best part of this is that there's only two titles to remember: bad debts expense and allowance for doubtful accounts. So again, you just take the amount here, either add in the debit or subtract the credit balance. That gives you the estimation, and then put that into your journal entry for that. And then estimating bad debts using accounts receivable balance and the credit card balances. That you did in another problem here. This is exercise 917. We're not doing number 2 for the test. It's just going to be credit sales and accounts receivables. The amount will be given to you, and the percent will be given to you. You just have to estimate what will become bad debt. So in exercise 917, credit sales, it's expected that 3% will become bad debt. And so you take the 300,000 times 0.03, and that gives you 9,000 bad debts expense, allowance for doubtful accounts. For the accounts receivable here, the accounts receivables were estimated to be 125,000. 6% will become uncollected, or estimating that at 7,500. And there was a debit balance in this account, so we have to add the two together. So that means that your required entry is going to be 12,500. Now, you'll notice that we use the accounts receivable balance for this part here for calculating what we think is going to be estimated bad debt for accounts receivable, but we do not use that for the credit sales. So with that, you're going to write this up for 12,500, bad debts expense, and allowance for doubtful accounts. Okay, then for your days sales uncollected, well, actually, I'll do the accounts receivable turnover because it's right here. Exercise 923, and with your accounts receivable turnover, you're going to figure out how many times that you think your accounts receivables are turning over. And what that means is that the customers are purchasing and then paying, purchasing and then paying. So for chapter 8, again, the ratio is in your textbook, and this is on page, just a second here. I didn't have it marked. Just a second here. I have two books going, one at school and one here at home, and I didn't mark it at home. Oh, no, that's not it. Oh, there it is. Okay, so it's on page 339 in your textbook, and this is going to be net sales divided by your average accounts receivable. So net sales divided by your average accounts receivable. So in this problem, you're calculating out year 2 accounts receivable turnover and then year 3. So you're given for this problem the actual accounts receivable, net sales, and then the accounts receivables for the individual years. So for year 2, we would take year 1 and add that to year 2 and divide it by 2 to get the average. If I give you the average, just use the average. So you'll use your net sales divided by your average accounts receivable, which if I do give that to you, just use that amount. For year 3, you're going to use year 2 and year 3 accounts receivable, add those together, divide it by 2, and then again, net sales is going to be the top part of that. So for exercise 923, again, net sales, you figure out your average accounts receivable and get your times, how many times it turns over here, okay? Now for year 2, this is 8.8, year 3 is 9.4. We want it to turn over faster, okay? So buy, sell, buy, or yeah, buy, pay, buy, pay, buy, pay. So for this one here, it's doing better in year 3 than year 2. And again, that can be tightened credit policies or improved collection efforts. So that's what you want to do for your accounts receivable turnover. Now, the other one is from chapter 8, and that's your days sales uncollected. And that is figuring out how many days it's taking to collect our accounts receivables. This is on page 304 in your book. It is accounts receivables divided by net sales times 365. Again, page 304 in the book. Don't forget the times 365. That's very important, or else you won't come out with the correct number there. So this is quick study 815, and it's got the ratio formula right up here at the top. Again, with this, we're calculating out year 2 and year 1. So again, your accounts receivable divided by your net sales, and then multiplied by 365. So don't forget to do that part. So for year 2, it was 14.6 days. Year 1 is 15.5. So you can see that it's taking less days here to collect the accounts receivables. And so again, that can be that we've tightened credit policies, decrease accounts receivable balances, and that can help make sure that we do get our money on time, especially if they're going a few days past the terms of the sale. Call them right away and get them to pay. So again, with quick study 815, make sure that you do have the times 365. You should have how many days it comes out on both ratios. Make sure you do bring that out 1 or 2 decimal places past the number so that you do get a more accurate ratio to compare year to year or compare with your industry average. Again, you're going to get 2 hours for this test. I will email you the forms along with this video for the test. You're going to, again, take this test, and then I will get it graded. I have to hand grade everything for this test, so it'll take a little bit of time. And then we just have chapter 10, which is dealing with our other assets beside plant assets. So we'll talk about intangible assets, and we'll also get into some more depreciation items as well, with like the different other types of assets that are out there. We will also, in chapter 11, work with warranty expense and payroll. Payroll is the big one for chapter 11. So 2 more to go. Chapter 10 and 11, there's no serial problem for Chapter 10 or Chapter 9, as you can see, but there is a serial problem for Chapter 11, and then there's also a comprehensive review problem for Chapter 11. Please, on the video for Chapter 11, and I'll put this in an announcement as well, make sure you follow the demo with that, because I do go over part of that comprehensive review problem, and it will help you rather than frustrating you as we get towards the end of the semester. So we have 2 more tests to go. We've got an ethics challenge coming up. We've got some assignments coming up, and then we will finish up our semester and be done with winter of 2022. So that's the end of this review. Have a great afternoon today, or whenever you're viewing this. Enjoy your time, and I will, again, answer any emails that you have regarding anything on the test.